We're going up $1 a day here, and I noticed here on Thursday that it just broke through $54 and they tapped it lower. And the same with gold. I mean, they got up to 40, just a bit over 4,300, and they tapped it lower as well. So you can see that even though the trace is up, that they are quietly in there preventing these prices from running away to the upside.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 13th through October 20th, 2025, while supplies last. First this week, 100-ounce silver Engelhard bars are just $2.70 over spot per ounce. Next, backdated 1-ounce gold Britannia are only $75 over spot. Finally, BU pre-33 $20 gold St. Gaudens coins are just $85 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're delighted to have this distinguished returning guest, Ed Steer, a longtime analyst of all precious metals markets and a member of GATA.org, the Gold Antitrust Action Committee, joins us this Thursday, October 16, 2025. Ed, thank you for coming back on Liberty and Finance.
Entirely my pleasure, Jonathan.
I was referred to, and my audience will remember this, by David Morgan, whom in the wake of our mutual friend Ted Butler's unfortunate passing, told me that you are the one that I need to get connected with in order to really understand what is going on in the precious metals markets. And right now, there's so much going on the exchange. We're hearing from London about physical metal shortages. We're seeing prices definitely running away. And we're asking if what you're seeing, if you can give us your beginning view of how to look at what you're seeing so that we can make sense out of what's going on right now in the metals markets.
Well, sure, Dunnigan. And first off, I want to comment on Ted. And there's nobody more deserving that should be around for what's going on today than Ted, because he started this back in 1984, 1986, before me, or anybody else could even spell the word silver. And he's been on this thing. And for him not to be here is one of the great tragedies in life. So, you know, I still admit that I was his student for 15 years. And now I'm his disciple. So everybody misses Ted, that for sure. And as far as what's going on right now, of course, everybody knows that there's virtually nothing in London as far as physical silver is concerned. You know, I watched the COMEX withdrawals, and the withdrawals from the COMEX for the last week or so in silver have been very, very impressive. 3 to 4 million ounces a day is being withdrawn from the COMEX, and there's no doubt about it that it's all being flown to London to meet physical demand there. I don't know how long they can keep that up, but this has been going on now almost since the beginning of the month. And the shortage just isn't in London. You know, I have some stories in my column that they're short silver in India, they're short silver in Korea. You name the country, and everybody's having trouble getting hands on physical metal, whether it be, you know, the large buyers for the ETFs, or and even we get down to the retail level in some of these countries. It's just unobtainium, as they say. And the thing is that the situation, because of the supply-demand deficit we've been in for 5 years now, going on almost 6, you know, sooner or later, that brick wall of supply-demand we're going to run into it. And it certainly appears that in London and every place around the world, that's becoming a reality. And we're starting to see it finally reflected in the price.
This physical metal shortage on different exchanges, how is this affecting what you've reported to us over the months, which is this extreme concentrated short position in gold, silver, and platinum on the COMEX in particular?
Well, I'll tell you what, for every, just to let your listeners know, is that, if the open interest in silver right now is about 171,000 COMEX contracts. And which means there's 171,000 long contracts and 171,000 short contracts, as you can't be naked long or short. So, and the interest in, just looking at silver, the interest in open interest in silver has been quietly creeping higher for the last 3 or 4 months as the silver price has been rising, which is an indication that there's no short covering going on at all. And because of the U.S. shutdown, there's no commitment of traders report coming out every week. So, I can't see the numbers to see if they're covering shorts or not. You would think that they were because, I think they're like 60 or 70 billion dollars in the hole. The silver shorts got a margin call yesterday of about $1.23 billion. That's spelled with a B. And they've been getting margin calls like that every day for the last 4 or 5 days. And you wonder how much pain they can put up with. And that's just for the silver going up from $40 to $50. Some of these traders have been short silver since it's like 20 or 30. So they're really, really in a financial hole. But so far, there's no sign of panic covering. And I think if there was panic covering going on, we'd be seeing silver go up like $3, $4, $5 a day. And right now, you can tell that everybody can see it on their screens is that, they stopped at 48 for a couple of days, then they stopped at 49 for a couple of days, they stopped at 50 for one day, and then 51 for one day. I mean, we're going up $1 a day here, and I noticed here on Thursday that it just broke through $54 and they tapped it lower. And the same with gold. I mean, they got up to just a bit over 4,300 and they tapped it lower as well. So you can see that even though the trace is up, that they are quietly in there preventing these prices from running away to the upside. But as you just mentioned in your original question, is that the short positions in silver, gold, platinum, palladium are like, for every unit of open interest, there has to be a long and a short, and there's no sign whatsoever that they're covering at all. And when we start to see them covering in earnest, when you see panic short covering, that's when you'll see prices jump up by, mega dollars per day. But so far, there's been no sign of that at all.
In your analysis of the gold and silver markets, you've also been looking at platinum. Any difference from what you're reporting to us about platinum availability that you want to focus on?
Platinum and palladium, the other two white metals are such dinky little markets relative to silver and gold that you only have to look at them sideways to make the markets move. And, there's been a big run on platinum. And one thing, platinum is a scheduled delivery month for platinum is October, which is ongoing right now. And there have already been 5,000 platinum contracts issued and stopped in October, and it's only we're only halfway through the month. I have never seen a rush for physical platinum that I've seen in this month's report for deliveries. It's absolutely enormous. So the physical demand for just about everything precious metals is off the chart these days. And there's shortages, physical shortages in everything. And it's just a matter of time before we hit a brick wall and everything. Platinum is the commercial trader's number 2 problem child after silver, because the short position it's the second largest after silver is off the charts, and platinum is right behind it. So the commercial traders that have been shorting this market and controlling prices for the last 50 or plus years, now that we have this brick wall in just about everything, it's most prominent in silver, of course, but it's there in platinum and palladium. And I would suspect that we're having a serious run on gold as well, because the amount of gold being shipped out of the COMEX in New York to London is just been off the charts for the last 3 or 4 days. So if this demand continues, and I'd see no sign of it letting up whatsoever, these prices that we're looking at today are going to be basically jacks for openers, because the sky's the limit once the short covering rally starts.
The physical shortage, if we could focus on that again for the moment. A few months ago, there was reports and a scurry to try to explain why there was such a rush of physical movement of gold from London to New York. And now you're saying it's flowing the other direction. Did you feel that we ever got a satisfactory explanation for the I won't say panicked, but the record moves of gold from London to New York a quarter or two ago, and then now for the reverse movement?
Well, there's been lots of theories saying why gold, it was a huge amount of gold and silver, not just gold. It was huge amounts of silver as well were flown from London and Zurich and various other places into New York. There's been no satisfactory explanation for that. I think it had something to do with the Trump tariffs or whatever. And some people are saying that they were refilling Fort Knox because they were replenishing the stuff that they were short there. There's all kinds of wild theories. I don't have a theory because I just don't know, and I'm just not going to do any wild-ass speculation on this. And as you correctly pointed out, there is gold and silver flowing back to London right now. It's been the last week or so, but it's nowhere near the scale it was when it was coming into the United States, say from December through April. What's going back to London now is just tiny compared to what was coming in from London at the beginning of the year.
In your newsletter, you walk through a number of different stages of analysis of the markets and the exchanges and the balance of supply and demand and so on. You've mentioned that we have a limited data set right now because of the government shutdown. What are the most noteworthy things that are jumping out to you now of the either the physical exchanges or the flows, supply and demand balance? What are you watching most closely?
India reports it here. There's a couple of things. First of all, India reports its silver inflows once a month. And the preliminary report for September, I can't remember, September or August, they imported like 22 million ounces of silver. And I have a story in my column for tomorrow that silver from India saying that silver is in short supply for their big holiday coming up with Diwali or whatever they call it. And it's just not available, and if it is available, it has a huge premium on it. That's one straw in the wind, and the other one I've been watching at is the Shanghai Futures Exchange, and I watch their withdrawals in that every day, and in the this week so far, they've withdrawn 6 million ounces out of there, and which is about 10% of what they have on hand in the Shanghai Futures Exchange for silver. And the amount of silver that's being withdrawn from the Shanghai Gold Exchange and the Shanghai Futures Exchange has really accelerated in the last week. And the stories out of China indicate that there's very huge retail investment demand in China as well. So you got India and China. And then, of course, there's Vietnam. I got a story about that, but it's mostly about gold. But the thing is that some of the largest markets in Southeast Asia are going for silver and gold in a big way. And as I said in my column, I think it was last week, if the Chinese ever get a bee under their bonnet to buy silver, well, it's going to be all over in a New York minute. And we're starting to see signs of that now. But we're transitioning from the very impressive moves, and it won't take long for the mania phase to get here. Everybody in the world knows what's going on. We've got the internet, we got social media, we got cell phones. Everybody that's got any money out there has got a brokerage account app, and then all they have to do is tap that and buy whatever that comes up that shows silver. When this mania really starts going, it's going to be one that's going to take everybody's breath away, including yours and mine.
The story about gold that you're following, if you want to give us more insight on that.
The stories on gold, basically, the amount of gold that is being, I just looked at every day, the amount of gold that's being asked for delivery on the COMEX is absolutely enormous. I've never seen anything like it. It's unprecedented. There's 2,000, 3,000, 4,000 contracts worth of gold, new gold being added, being traded. I think today I got it right here let me bring it up on my desktop. And I'll refresh the page just to make sure the number's accurate, but I'm sure it's right. In October so far, there's been 4,627 gold contracts traded. This is a delivery month for gold, October. And this new amount being traded is all going to stand for delivery tonight in tonight's daily delivery report. I mean, that's 462,000 ounces of gold. It's about, just under 7 tons. This has been going on day after day for the last month or so, or 2 months. So the demand for physical gold is through the roof. Nobody wants to talk about, a possible shortage in gold, but they say, well, there's lots of gold in London, there's lots of gold here, but the thing is that most of it's already got somebody's name on it, and the free float, and nobody knows what it is. But the free float in silver is gone, and it won't take long at this demand rate in the COMEX in New York and probably in London and other centers as well before gold gets cleaned out too. I mean, gold seems like a big market, but when everybody in the world wants it, they can dry up supplies overnight. So what I'm really watching is the deliveries in the COMEX. We started off the month on first day notice with 29,000 contracts of open interest standing for delivery in October. And as of last night, including what I'm looking at on the screen today, there have been close to 50,000 contracts already delivered this month. So it's been almost double what we were at the start of the month, and silver is about the same. So the demand everywhere is just breathtaking. So like I said, the prices we're seeing right now are starting to reflect that. And for silver, once we hit the point where there's no supply left at all, because that day is coming, and if we're not there already, we're very close to it. And at that point, the only silver available will be what's coming out of the refiners every day. And Keith Neumeyer's 3-digit silver will be a reality in a very short period of time.
Along the way in bull markets, we see sometimes rather violent setbacks, and that certainly has happened in the past with the precious metals, notably silver. Your thoughts on people who are waiting on the sidelines for a pullback before entering for the first time or adding to their positions in the metals at this time?
The thing is that we see these violent pullbacks, but these violent pullbacks don't happen by accident. The precious metals prices have been managed through all of recorded history. And the 8 largest traders, most of which are bullion banks and investment houses, have been managing the price, for as long as you and I have been alive. And it really started in 1975 when they opened the COMEX for trading paper gold and COMEX futures market. And so they've been actively managing the price for the last 50 plus years. But with the fiat currency system coming to an end, things are getting real dicey, and the prices are starting to reflect that. And they come along every once in a while, like they did earlier this week a couple of times. We just hammered the heck out of it in the very thinly and illiquid overseas markets. But the thing is that they always come roaring back with it. If they did that 25 years ago, it would take months for it to recover. But in the last 2 or 3 weeks, they hammered down $1 or $2. I remember one day they had it done over $2, but by the end of the day, it was up again. So the huge demand is there, and their attempts to blow this thing lower are becoming futile. And like I said, they recover within hours. I see they've got silvered up right at the moment. It was up $1.03 at its high tick today at just over $54. Now it's down at 74 cents, but I can guarantee you with the buying power under the market right now and the way things are going, it won't be long before we're above 54 and heading towards 60. So these if you're looking for a big dip to buy, I wouldn't count on it.
For those who are just waking up to this, who are just finding out about the importance of protecting your financial future in physical and intrinsically valuable assets like gold and silver, any thoughts on how someone would be prudent to get started, both in terms of when to get started and perhaps a manner that's tried and true, proven and responsible in your view?
The first thing people have to do is, if they have any money to invest, is to buy the physical metal first. Now, a one gold coin right now in US dollars is going to cost you north of $4,300, maybe $4,400. You get a little dinky coin. And even I have trouble with that. But, right now, the best return on dollar over the long term, and you said it, and I've heard Andy Scheckman on your show lots of times, if he says the same thing, and I'll second and third that, because the place you have to be in this market now is in silver. And I urge people, if they're going to start investing money, silver right now is only $54 an ounce. My opinion, it should be close to double that amount. And so that's what I suggest people do, is buy physical metal. And if they're if they want to get investing in stocks, in the U.S., the best place to be. You don't try to rifle shoot this sector by buying individual stocks that people recommend. I own it myself, and that's the ticker symbol SILJ. And there's in Canada, there's what's called 9 Point Silver Equities Fund. The people can buy. It's run by Sprott, and I'm heavily invested both those plus a whole bunch of individual stocks. But start off with the physical metal first, and buy a good mutual fund that holds a whole bunch of silver equities in it, so that you're protected if anything goes sideways in any one of them. So I'm eat my own cooking. I own everything in silver, and I'm all in the precious metals, and have been for about the last 20 years.
From a preparedness standpoint, we've touted for some years here the utility to those who are looking to have some emergency cold hard cash on hand in case they needed to buy food or fuel or repairs or services, that sort of thing in there to keep their household going if there were a real upset financially. In 90% silver U.S. constitutional coinage, like the old pre-65 dimes, quarters, and half dollars, we've heard some rumors recently that because of bottlenecks in the refining process that takes extra time if you're not starting with 3 nines fine, that there's been a discouraged, less interest in purchasing of 90% silver by refineries or by even major dealers. Do you have any insight to people from a preparedness standpoint of the attractiveness, the utility, or the value of the pre-65 dimes, quarters, or half dollars as one way to accumulate a portion of your silver, physical silver?
Okay, on both sides of the Canada-U.S. border, I live on the Canadian side, you're on the U.S. side, we have the same situation. Canadian coinage is only 60% silver back then, and in the U.S. is 90%. I have a lot of what they call, quote-unquote, junk silver. I have lots of it. And that's another way to invest. And, if you're going to go and buy some physical silver, I highly recommend that you have some of that stashed away someplace as well. It'll stand you in good stead one day. And like I said, it's 90% silver, and it will always have its intrinsic value. So it's, like I said, highly recommended. I own it, and everybody should.
On the opposite end of the spectrum, maybe it's not the opposite. It's similar in that it's historic, and it's used to be circulating coinage, but the pre-1933 U.S. gold has at times carried a significant premium higher than modern pure gold bullion for various reasons. But basically that premium relative to ordinary bullion seems to come and go like the high tide and the low tide over decades. At the moment, it seems to be at a rather low tide, but perhaps that's changing. Others have said that in hard times or in panics or that sort of thing, that all the niceties of historic value or rarity or whatever kind of go out the window, and all that people care about is it gold or not, is it real or not? Do we have any historical reference or some precedent that's been set in previous times of rapid inflationary environments like the 1970s or other periods that you might point to as far as what happens when there's stress in society, stress in the monetary metals, and whether those things that have value outside of just the intrinsic precious metals content seem to hold up well during those times or not?
I'll tell you what, this is an area that's sort of kind of beyond my expertise. I understand there are premiums on some of, the pre-1933 gold, and for reasons of rarity or the, rare mintages or the condition or whatever. I have one gold coin from back in that area from the U.S., and I bought the nicest one I could find, and it was just a few dollars over the spot price. And unless you're getting into numismatics, my advice is to buy the lowest premium stuff that you can find that's in decent shape. One thing I remember back from the 1980s, okay, when we had the last silver boom, and I remember it extremely well, is that everybody was selling every silver teaspoon they had and every silver tea set they had, and trays and forks and knives, the whole 9 yards. I mean, everybody was selling everything. And one of the things that one of the dealers in New York was bemoaning, and I think, or it's New York or London, was the fact that there were tea sets that were like 100 and some years old that were being sold for their silver content, which were worth 3 or 4 times that the value of silver at the time, which was $50, just because they were an antique. And so you should be very careful if you're going to throw a Grammas tea set into this pot, because this probably has a higher intrinsic value than its silver content. So in that regard, as far as antiques, that's something you should be careful of. But as far as gold and silver, gold coins going back pre-1933, I would say that probably 95% of them should be sold for basically their numismatic value, or for their gold content. And if you want to get into the specialty coins for the numismatic value, that's a whole different world.
It's a great time for people to be paying closer attention to this. We've been talking about it. I know you have for decades. We've been interviewing members of GATA for over a decade on our channel. And it's exciting times to see some of the things that were longed for and watched for playing out and starting to break free, it seems. I guess there's a kind of enthusiasm that happens, not just from people being positioned before a market movement, but I guess maybe at a deeper sense, the sense that perhaps the laws of nature are starting to reassert themselves over the laws of artificial suspended reality. Any thoughts from you on this moment we find ourselves in, and what you've been anticipating about it, or what you look forward to, either with hopefulness or with some trepidation about the road ahead?
Well, I'll tell you what, thank you, Art, for asking that question. I tell you what, I've been at this since about 1998, and seriously since about 2005. And it's been a long 25 years in the wilderness, I can tell you that. And, I look at my stock account every day, and I can hardly believe what I'm looking at. And I know a lot of my subscribers, I get emails from them saying, I'm the days here. And one guy said, "You feel like I've been chasing this car all my life, and now that I've caught the car, I don't know what to do with it." So for us long-suffering people, it is a relief to see that, But if you turn around and you look in the other direction, you have to yourself say, hey, friend, why is gold rising? And the reasons it's rising are very disquieting. Now, silver's rising for a different reason, okay? And that's because of the supply-demand fundamentals and the fact that it's been suppressed, like gold has been suppressed for all of our lives. And finally, we're starting to see it reflect reality. So silver's a different case. But in the case of gold, there's a shortage in it too, or a developing shortage. But the fact of the matter is that if you take a look at the world, our current system, I would remember 71 when Nixon came on Bonanza and interrupted and said, this was back in August 15th. I remember that day very well, okay, because I was there. And they interrupted that. I didn't think anything of it in my time, except my parents did. They knew right away that something big was up. So when we see gold now, which was, I don't know, what the heck was it, $35 or $42 an ounce, now we're looking at a number of, 100 times that size, and it reflects the fact that paper currencies everywhere are being debased. And what really is disquieting to me is when Trump changed it from the Department of Defense to the Department of War. There's going to be big trouble in River City, and we already see that happening all over the world. It's economic, it's financial, it's monetary, it's the whole 9 yards. And it's happening to us. It isn't happening by accident, it's happening deliberately. And so I'm very happy that things are going well for, my stock portfolio, and everybody else is listening or watching this podcast. But, you have to look in the other direction, so, be careful what you wish for.
We've been grateful for your presence here. You do an extensive, and you had shared with me an issue of your newsletter that's quite extensive. How can people take advantage of the deep analysis that you do?
If they're if your listeners are interested, you can Google me at Ed Steer, STEER, Ed Steer Gold Silver. My website will pop up. There's a tab on there that gives you a free sample column, and you can look through that. And if that's the kind of detailed and factual information you're interested in, and the analysis that I give, then you're free to sign up. And it costs $100 a year for about 260 subscriptions per year, which I consider to be a real bargain in this day and age. But that's up to your viewer to decide that.
Well, we're grateful for your presence here always, Ed. We've been talking with Ed Steer, And we'll put a link to your website in the description of this video for people to take a look. And always grateful for your visits here with us on Liberty and Finance.
And I just want to add one thing in the end. I want to add Thomas Jefferson, who is my favorite American of all time. You know, it was the quote in my column yesterday, and I'll say it here again today. And he said it absolutely correctly. He said, paper is poverty. It is but the ghost of money, not money itself. So I'll just leave you with that.
Thank you, Ed, again for being here with us on Liberty and Finance.
My pleasure.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 13th through October 20th, 2025, while supplies last. First this week, 100-ounce silver Engelhard bars are just $2.70 over spot per ounce. Next, backdated 1-ounce gold Britannia are only $75 over spot. Finally, BU pre-33 $20 gold St. Gaudens coins are just $85 over melt. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.